Hi guys, what is going on and welcome to today's YouTube video. In today's video, we're going to discuss, instead of Bitcoin or instead of Ethereum, we're going to discuss one of the hottest altcoins out there in 2023, ING, Injective, whatever you want to call this project. It's one of the coins that has been rallying like crazy in 2023 with an approximately 800% rally. Today, we are going to look at potential entry points to look for spot buys, but also potential entry points to look for swing long positions on ING. I will exactly explain my reasoning why I do believe, not only fundamentally, but also technically because of the chart, why I do believe that both in the midterm and also long term, ING should see much more upside. First of all, let's discuss the reasonings why I do believe that because of this chart out here right now, that I believe that ING should go higher. Looking at the daily time frame, we can see, like I said, that we have already seen a massive rally to the upside. But the reasoning why I don't think that this rally is over yet is because of a lot of draws on liquidity that we still haven't taken out to the upside. Starting with these relative equal highs over here. So over here around $9.97, we put in this high, ING made a corrective move, and on this pullback over here, lots of people were looking for shorts. The stop losses of those shorts were resting above this high, but this high over here didn't take those stops, and afterwards we started reversing to the downside. So people that were opening swing shorts on this pullback over here still have their stops above this high, or right now above this high over here. And that's the first big draw on liquidity. On top of that, a lot of market makers, a lot of smart money were looking to fill their swing short orders over here. They were not only looking to fill the swing short orders over there, they were also looking to sell their spot bags over there. Why? Because they can only sell their spot bags and build swing short positions inside big liquidity pools. Otherwise, there's not enough liquidity in order to fill their sell or short orders. Okay? And within this pullback over here, there wasn't enough liquidity or enough consolidation within a liquidity pool, in my opinion, for market makers to sell their spot bags and to build swing shorts. And that is the first reason why I do expect more upside for ING in the mid-term. On top of that, we also have this massive wick that aligns perfectly with these equal highs. So we put in this huge wick over here. Yes, we have filled it for 50%, but why would the price come so close to filling this wick for 100% and taking out that wick and not take it out? Another reason why I believe that at some point we will take out this wick over here. Now, something that interests me a lot is this huge wick over here. We can see this massive wick, and if we are going to take the 50% level of that wick, so we are going to take it like this, and I'm going to switch on the 50% level like this, we can see that we haven't tapped into that 50% level yet. So we haven't even filled this wick for 50%. Now we know that those huge wicks are a big ass draw on liquidity, and they should get filled at least for 50%. So until this wick over here is filled for 50%, I'm not looking to sell my spot bags, and I'm only looking to accumulate more. Plenty of reasons why we should go up. Now let's start looking at potential entry points for ING, because after this massive rally to the upside, we can see that ING started ranging for a pretty long time. We have a beautiful range that we can look to trade, that we can use in order to identify potential entry points. Why is such a beautiful range? Because over here we put in a high after this massive rally upwards. So this is our first pivot, and we know that to identify a range we need 3 pivots. Over here we have our second pivot, and this was already our third pivot. Okay, so a double tap of the range low, and we have our range high over here. The thing that confirms this range even more is another tap of the range high over here. Okay, so what can we do? We can identify the range like this. This is the range that we are currently trading in. We can also see, and that is something that is extremely important with ranges, is the fact that the mid-range is being respected beautifully as well multiple times by the ING price. Okay, and that is another thing to keep an eye on when you are looking to trade a range. Now, the fact is that we have seen a small deviation of the range low over here, a small wick below that range low. We have tested the mid-range afterwards, gained the mid-range and went on and tested the range high. But we haven't seen a deviation above the range high yet. Until we see a deviation above the range high, I'm bullish on ING. The thing is, now we have to identify potential entry points. And in my opinion, there are two entry points. If we are going to use this range, and if we are going to switch on the 0.25 level like this, we can see that the 0.25 level aligns perfectly with the previous wick over here and also with the previous wick over here. We can see the respect of the 0.25 level over here, and over here as well. Definitely a critical level to keep an eye on. Now, if we're going to zoom in a little bit on this 0.25 level, we can see that right below that 0.25 level is where we have this bullish daily fair value gap. And this is my first area of interest to look for potential swing longs, to look for potential new spot buys on ING. Because personally, I think that there's a decent chance that we are going to visit this daily fair value gap. We are going to wick into it. Maybe we'll wick into it a few times, and we are going to see a test of the mid-range afterwards. Gain the mid-range after a test of the quarterly range over here, and you're going to visit the range high over here, and that remains my main objective. Critical area to hold on to for ING. Let's also have a look at the EMAs on the daily time frame, and what can we see? The 200 EMA and the 200 moving average, two of the most important moving average of all time, probably the most important ones, are aligning perfectly with our area of interest over here, and it will be the first time that ING will test the 200 EMA and the 200 moving average after the test of the 200 EMA over here, in which after the test we saw a huge rally occur to the upside. A beautiful reason to keep an eye on this area of interest. Personally, I don't think that we will lose this area quite easily. I think we will at least see a test and a bounce towards the mid-range afterwards and potentially the range high and potentially higher. But if we do lose this critical area of support in between $6.67.7 and $6.30.4, if we lose this area, we will visit the range low. Now, if we visit the range low, I'm going to wait for a deviation below the range low. What do I mean by that? I'm going to wait for us to create some sort of a fake breakdown out of this range, consolidate, because what will happen is if we consolidate below that range low, that means that market makers get the time to fill their orders within that liquidity pool below the range low, and retail traders will start panic selling and panic shorting ING. Market makers will use this sell pressure, will use this short pressure in order to fill their own buy and swing long orders. If we then manage to reclaim the range low after a deviation of the range low, and if you haven't seen a deviation of the range high yet, you should get a test of the range high over here. That's my second trade scenario. This one is higher probability of playing out and has a bigger risk to reward ratio, because this is like an 80% increase and this is about a 50% increase. Still a massive increase, but the bottom one is a little bit of a bigger increase in my opinion. Now, like I said, personally I prefer this scenario over here because I do think this one has a higher probability of occurring. Not necessarily a higher probability of playing out, but it does have a higher probability of occurring. So personally looking for buy positions around this quarterly range, you can wait for a sweep of the quarterly range into the EMAs, reclaim, and that could be your long and buy trigger for spot buys as well, targeting the mid-range, targeting the range high, and potentially even $13 to $14, and potentially even higher, of course. But in my opinion, guys, ING is starting to look interesting for potential buys, for potential spot accumulation right now. Lots of people will start panic selling right now. Lots of people will start to become bearish on ING right now. And that's the moment for me where I start becoming interested in buys and long positions. If you guys do have any questions after this update on ING, after these trade ideas on ING, please let me know in the comments down below. Also, guys, make sure to join our free Discord. Big things are coming. Thank you guys for watching, and I'll see you guys on Friday's video. Ciao, ciao.